Yeah, what's up guys, it's Arab the Plug and you're welcome back to my YouTube channel. And in this video, I'll be talking about an amazing topic, and this is one of the topics that a lot of beginners, intermediate traders fail and find it difficult in the crypto markets. Not only in the crypto market, but also in the Forex market, and that is psychology. I know sometimes you understand technical analysis, you know how to do your fundamentals, you know how to manage your risk, but you get it wrong when it comes to playing the game with your mind the right way, because the game of trading, whether you are trading crypto, stocks, or Forex, is a game of the mind. So one of the mistakes that a lot of traders do is that they focus too much on the technical analysis aspect or even the fundamental analysis aspect, and they neglect the aspect of trading psychology, which is something of the mind. So in this video, I'll be teaching you 6 hacks you can use to improve your trading psychology and get more wins in the crypto and even in the Forex market. So if you are just joining this channel for the first time, if this is the first time you are watching my video, consider subscribing to my channel, because on this channel I talk about cryptocurrency trading, I talk about Forex trading, I talk about online businesses you can do as a Nigerian or as an African generally. So make sure you hit the like button so that you get to see the content I post, and also hit the subscribe button so that you become one of the members of this channel and we learn and grow together. So let's get right into the content. The first psychology hack I'll be sharing with you in this video is patience. Patience is one of the toughest things for traders in the crypto and the Forex market, and that's because sometimes when the trading session starts, or when the trading week starts on Monday in the Forex market, you have already cited or you have already identified some trading opportunities on your chart, and you can't wait. In most cases, you can't wait and get right into the market and start printing money because of the excitement that you have, and because of the great expectations you have from your analysis, and because of the fact that you trust your analysis. You already rush into trade. This is one of the things that happen to a lot of traders. It has happened to me a lot of times, and I've taken my time to master this thing and find a solution to it. So patience is one of the most important requirements for a trader in the crypto and the Forex market, and this is divided into different ways. One of the ways is that you have to be patient with your analysis. When you are analyzing the market, you must have some confluences, some criteria that must be met before you can take a trade. For example, if you trade support and resistance, there must be some criteria that must be met whenever the price comes to your support or resistance level before you take that trade. So if you are taking 5 trades, for example, and you use 3 or 4 confluences. So let's say you've seen 1 or 2 confluences, you should not take the trade. So you should wait for the remaining 2 or 3 confluences all to come together into your analysis before you take that trade. So that's one of the importance of patience in the crypto or Forex market. So whenever you're analyzing the market, be patient enough to make sure all your rules, all your requirements before entering a trade are met. So that is about your analysis. So also, you have to be patient about entering a trade too. So after seeing your analysis, then you find out that there is a news coming on in the market, which is a fundamental event which may affect the movement of the market. Be patient and let that event come and go. See the effect or the aftermath of the event and then enter the market. So patience is a big requirement when it comes to trading the crypto and the Forex market, and you have to be patient with your analysis, and also you have to be patient with your execution. If you are patient enough with these things, you'll be able to develop a good psychology around the analysis you have done in the market. The second psychology tip I'll be sharing with you in this video is understanding the risk to reward ratio. You have to understand the fact that in trading, you are risking something to get something. So your risk, you should understand your risk and you should understand your reward. If you are scared of losing money, you shouldn't be trading in the first instance. So that is one of the things I used to do. Whenever I'm getting into a trade, I already have a preconceived notion that I have a certain amount of money I want to lose in this trade. So I enter the trade with the perspective that even though I am confident in my analysis, once I make sure that all the confluences I need are met, I am confident in my analysis, and I am hopeful for a reward. But I already go into the trade with the notion that this is the amount of money I am willing to risk. And once I go into the trade with this, I know that eventually the market might take out the risk, and I get out of that trade with a loss. So with that, I make sure the risk is reasonable. I'm not trying to risk $400 on a trade on a $1,000 account. So if I have a $1,000 account, I will not be risking more than 0.5 to 1%, 0.5% to 1% on a trade, because I know if I lose 1% of my account, I will not be affected mentally. So you have to understand your risk, and you have to understand the reward you are getting from each trade to be able to have a balanced psychology, knowing fully that either of the two things will happen. Either your risk is taken out or your reward is gotten. So that is a psychology hack that you have to have, the mindset you have to have as a trader before you ever get into the market or into any trade. The third psychology hack you have to understand in the crypto and forex market is understanding the concept of the psychology of fear and greed. Fear and greed are two things that affect traders whenever they trade the crypto and the forex market. And fear is all about a trader not wanting to take a risk on a particular trade because he is afraid that the trade might go against him. And greed is whenever you are already in a trade, you're already making money, but you feel that, well, I think I should make more. You have a target of 1:3 risk to reward. You have already met your target, but you feel like this coin is likely going to go up. This GBP USD, the moment I see in this GBP USD is very bullish, and let me just keep the trade and let it continue running. All those things are things that are going to mess up with your psychology. And once you get used to them, it will be very difficult for you to have a balanced psychology in the market, which is going to affect your trade and your profitability in overall. So make sure that whenever you have a trade to enter and you have made sure that all the confidences you need in your analysis is met, have enough confidence in your trade. Have enough confidence in the risk and the reward you are going to take. And once you are able to get the reward, get out of the market and prepare for the next trade. The fourth psychology hack I'll be sharing in this video is to cut off the screens. One of the things that help you as a trader is to have a time outside your trading view or whatever charting application you use, outside your Metaphor account or your Binance or KuCoin account. Outside all these accounts, have a life outside the screen, so that you have some other habits outside of your trading that's going to help you relax your mind, relax your heart, and make sure you get refreshed whenever you want to enter another trade. Once you are out of a trade, try and stay away from your laptop so that you don't sometimes when I'm entering the trade, when I'm analyzing, sometimes I've done an analysis and I've taken the trade. Now I'll just be like, oh, I have more coins or more assets or more pairs I can analyze on my watch list. Let me just try and look at this again. I look at that, I analyze again, look at another one. And at the end of the day, your brain gets messed up and you may end up taking the trade you should not be taking. So you may end up taking a premature trade. So make sure you take time off your screen almost every day. Take your trade, monitor your trade. Once the trade has hit the stop loss or take profit, try to find something, a hobby to relax. And after that, after relaxing for a few hours, get ready for the next trade. If you're enjoying this video, ensure you subscribe to my channel and hit the like button. It's going to help with the YouTube algorithm so that this video will be pushed to a lot of people and they're going to benefit from all these psychology hacks. Let's get to the number 5. The fifth psychology hack that I'm going to be talking about in this video is to avoid the big blow-ups days. And this means that when you are in a trade, do not worry about how much money you are going to make. Simply focus on how you can put your limits or your losing trade to a limit so that you will lose less trade than the ones you are going to make. So stop looking at the money. Stop looking at how much in dollars is your stop loss or in naira or whatever currency you are trading from. Stop saying, okay, if this trade hits my stop loss, I'm going to be losing $50. I'm going to be losing $150,000. I'm going to be losing $1,500. No. Look more into how you can manage your risk and not the amount you are going to make from that trade. So that, for example, If the rule you've set for yourself is that on each trade I'll be risking 2% of my account, make sure you stick to the 2% and think less of the fact that, okay, if I take the trade, I'll be making about $5,000. Think less of that, because whenever you have a trade that is going against you, you get so engrossed in your thought that you even, maybe sometimes you will not set your stop loss and you end up losing more. Or you get too focused on the amount you want to lose, or you want to win rather, and start adding more money into your trade, and you keep accumulating a lot of losses with that. So make sure you focus much more on your risk management and not always the amount of money you want to make. And this drives us to the last point, which is do not add money to losing positions. You have taken a trade, you have identified your risk, you have identified your reward. Now the trade is going against you. Let's say your stop loss is 20 pips, for example, and you are down 15 pips. You have a drawdown of 15 pips. Don't add money into that trade. Okay, let me just add a few $200 to the trade. Maybe when trade goes up so that I'll be able to make more money. That is a wrong thing, and that is a wrong mindset. And when we talk about psychology is something of the mind. You know, in this video, I'm not talking about support and resistance. I'm not talking about chart patterns. I'm not talking about candlesticks. I'm talking about your mind, because it is your mind that's going to control everything you have done with your analysis, whether fundamental and technical. I hope you got some value from this video. Make sure you like this video. It's very important. Do well by liking this video, subscribe to my channel, and share this with your friend. I'll see you in the next video.